All right, exercise 2.5. This one I like, this problem I like, because as you can see under the assets section, they've listed cash, accounts receivable, and equipment. So this is a little more realistic, that there are more than one kind of asset. So we're going to get some practice here with some transactions, and I think this is going to help put a lot of what you've done so far into perspective. Next we'll have the liabilities, and that's when we owe people money. And then last, our owner's equity. I also like this problem because they go ahead and they put revenue and expenses right with owner's equity, which is how it's easiest for me to understand. Instead of thinking of revenue and expenses as something different, they just need to fall under revenue or under owner's equity. All right, so let's get started with the problem. So there's 8 lines and 8 transactions. So transaction number 1 says John Amos started the business with a cash investment of $60,000. So we need to place $60,000 in 2 places, double entry accounting. So we know we're going to put that $60,000 in cash, and then it was his investment, which is owner's equity. Okay, transaction number 2 is purchased equipment for $22,000 on credit. So we have the equipment, we owe for the equipment. So let's go to line 2 under equipment, $22,000, and we will be owing for that. Okay. Oh, also to point out here is breaking up the 2 sides of the equation. So assets on the left, liabilities and owner's equity on the right. Okay, transaction number 3, performed services for $3,100 in cash. What kind of business is this? Let's see. A copy business. So we made copies or did copies for a client, and they gave us cash. So we would be adding $3,100 in cash, and when you perform a service as part of your business, that's revenue. So $3,100 in revenue. Didn't make that very good. Okay, item number 4. Purchased additional equipment for $4,600 in cash. So we will be adding to our equipment $4,600, and we pay cash for that equipment instead of owing later. So we are going to be subtracting from cash $4,600. Now, all along, it maybe would have been a good idea if we would put pluses next to our items. So far, let's go back to transaction 1. That would be adding to cash and adding to capital. Item number 2 would be adding to equipment and adding to liabilities. And number 3 would be adding to cash and adding to revenue. Okay. Now so there's only one minus sign so far. Number 5 is performed services for $5,050 on credit. So we performed service, that's a revenue, $5,050. That is adding to our revenue. And our customers are paying us later. So we perform the service, they're paying us later. So when their customers owe us, that's accounts receivable. That is still an asset. We did perform the service, the money's going to come. So we count it as an asset. Okay, item number 6, paid salaries of $44.50 to employees. So we are paying that out of our cash account, $4,450, And salaries is an expense, so that takes money out of our owner's equity. So we will be subtracting $4,450 eventually from our owner's equity. All right, number 7, we received $3,200 cash from charge account customers. Okay, so we're going to add cash, $3,200, and charge account customers have paid to accounts receivable. So now we have reduced how much people owe us by $3,200. And number 8, we paid $13,000 to a creditor on account. It didn't say pay cash, but we're assuming that. What else would you pay? So we're going to subtract $13,000 from cash, and that was an accounts payable. So we're going to be subtracting the amount of money that we owe to our creditors. Okay, that's it for our transactions. Now we're going to add and subtract and get totals on each one of these lines. So for cash, we'll start with $60,000. We'll add $3,100. We'll subtract $4,600. We'll subtract $4,450. We'll add $3,200, and we'll subtract $13,000. And in the end, you should get a total of $44,250. For accounts receivable, we're going to subtract $3,200 from $5,050, and we will end up with $1,850. For equipment, we're going to add the two numbers together for $26,600. For liabilities, we're going to subtract $13,000 from $22,000. That will leave us $9,000 that we still owe people after the end of this month. Our capital remains $60,000. We didn't take anything out of our business as capital-wise. We have $8,150 in revenues. That's money we made doing what we do. And we had $4,450 of expenses. Now we don't put an extra and minus sign there. $4,450. Okay, so now we're going to add the three assets together, and we are going to add together our liabilities. And our owner's equity is just a little bit tricky, so we're going to subtract $4,450 from $8,150 and then add to $60,000. And actually, I guess I'm looking at the problem in the book and the solution, and we weren't told to do this, but this is a great thing to do to just double check that we got everything, all of our transactions in there correctly. Okay, so let me finish this problem then. 8,150 minus 4,450 is 3,700, and so we're going to add 3,700 to 60,000. So our liabilities plus our capital plus our addition to our capital should be 72,700. Okay, let's double check our numbers for the assets. 44,250 plus 1850 plus 26,600, and we get 72,700 on this side. So we know our formula, our transactions were recorded correctly because our assets equal our liabilities plus our owner's equity.